Ian, what's up, buddy?
What's up, man? I got no hat on. I can't even talk.
We're talking about many hats real estate investors wear. You all of a sudden took your hat off?
Yeah, man. I got to know what hat I need on. Do I need this one? Do I need a different one? What are we doing?
Dude, we're going to have some fun. Ian's in a hotel room. Hopefully his Wi-Fi is strong enough. I'm in the office. I know my Wi-Fi will be strong enough. Let's tune into the theme music real quick for the open, and we'll be right back at it.
Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
We are back. So today is Wednesday? Yeah, March 24th. It's rainy and crappy in Columbia, Maryland. How's the weather where you are?
It is bright and sunny. I drove through the rainstorm coming down to
Wait, don't tell anybody where you are. Wait, don't tell anybody where you're at yet. I want everybody to guess. That's all right. It's too late.
All right, well, I won't say anything.
All right, if anyone, I don't know who heard that, but if you haven't guessed yet, if you didn't hear Ian say, comment below this feed where you think Ian is. What did you say the temperature is? That'll be the only clue.
Let me look. It is, according to the weather app, my location says it's 70 degrees.
We can't see it. All right, 70 degrees. That's the only clue. All right, so today we're talking about the many hats real estate investors wear. Very, very good, interesting topic. Anyone has any questions related to this topic as we go along, or have any comments related to anything related to real estate investing, feel free to comment, and we'll get to your question or your comment. So the reason that this is an interesting topic is real estate investing in general is one of the business models that sometimes is kind of a lonely business model, right? And a lot of times you don't have a partner or a big staff. And you got to kind of be the jack of all trades, and that's okay, right? You can have a bigger operation or you can have a smaller operation. There's no right or wrong. So we're going to start off by going through many hats that real estate investors wear, and then we'll kind of dial into kind of each one as well. So I like to look at things kind of starting from the beginning, right? So on the beginning side, you got to be a marketer, right? You have to put your marketing hat on. And why do you need to put a marketing hat on? Because you need to find deals. Right, you need to find deals, you need to find opportunities, you need to find buyers or sellers that have properties, work with real estate agents and things like that, right? So you got to be a marketer. In my opinion, it's the most important trait, right? Because it doesn't matter, how good of a real estate investor you are if you don't have access to good deals. If you don't have access to deals at all, what does it matter if you don't have access to them? So you got to be a marketer to start off with, right? So what's after marketing for deals, Ian? What would you say the next big hat is that you would need to wear?
What's the next big hat after marketing for deals is, I guess that's when you go into underwriting mode, right? I think you would
analyzing opportunities.
Or wait, before you go into I guess after marketing, aren't you in sales mode, right? Like if someone's calling you, are we putting that?
Yeah, I look marketing and sales kind of together. And I'll let me go over a real broad overview first before we dig into these. As a real estate investor, there's lots of different hats that you got to wear on a regular basis. And so many of us fall into typically one role, and that's it, instead of understanding that we got a lot of roles. And I would say you probably have to wear 10 hats. And some roles you like, some roles you don't like, some hats you like wearing, some hats you don't like wearing. But it's important to understand that good real estate investors need to understand the concept and potentially be involved in all of it first. And then the goal is to hire employees, outsource stuff, figure out ways to automate stuff, find a business partner, things like that. And you can do that on the front end if you want. But I believe that most real estate investors are typically one-man bands. Plus a business partner. Sometimes they have business partners. So marketing and sales, a lot of times I kind of overlap that into one, right? Finding opportunities, looking out for opportunities, scouring the internet, doing, direct mail pieces, networking with other investors and real estate agents and things like that. So, but I agree, like marketing and sales. And then we move on to underwriting. and analyzing deals. You want to hop into that for a sec?
Yeah, sorry. Facebook's post, they need to fix this share app. It's absolute horse crap. I bitch about it every time. But when you come into underwriting, especially nowadays with everything that's going on, now more than ever, being a good underwriter and being the financial analyzer of your deal is the most important thing you can do, right? There's a few things to think about. Right now, the market's absolutely out of control.
Ian already cut himself offline because his crappy internet. So I'm going to take over the show for now until he hops on. I was just about to chat some questions as well. As real estate investors, how many different hats do you think you wear on a regular basis? Okay, so after marketing and sales, you talk about analyzing deals, right? Underwriting deals. You got to figure out how to underwrite your deals, how to analyze your deals. We'll go over an example, right? Getting on MLS and pulling comps, not just asking your real estate agent what the value of the property is. Your real estate agent doesn't have an economic interest in the property. You have an economic interest. Your appraiser doesn't have an economic interest in your property. You have an economic interest. Now, I'm not stating that it's not important to get opinions from real estate agents and real estate appraisers and other real estate investors in the area, friends, family, things like that. All that's good, right? But it's your deal. You have the economic interest in it. You got to make the final decision.
That's exactly where I was going to go with my comments before. My crappy computer, I need to invest back into a new computer. However, me and Jay, I was just talking about this on my ride down here, is that, no matter how you structure a deal, your capital or your investor's capital, that is the most important capital that's out there. And probably your investor capital is way more important. So when you're making this financial decision to get involved in this deal, number one, is it the best deal that's available to you at this time? Number two, is it a deal that you would be comfortable putting 100% of your own money into it before you take bank leverage? And number three, what do you your investor's money? And then number three, is it a good deal? Does it have long-term potential? Where is this deal going? These are all factors that you need to take into account when you're underwriting a deal. I think too many people nowadays are just going, oh, it's on the market, it's got to be a good deal. No, just because it works out to a certain cap rate, or because it's listed on market, or because it fits into this one investment model, doesn't necessarily mean it's the best deal that's available to you at this instant. Exactly.
So there's a lot of things that we could put under the hat of analyzing deals, right? Underwriting deals. We could put potentially understanding the construction component of this. During our last meetup group, we had a few questions related to how do you analyze construction if you're not a contractor, if you're not a builder, and things like that. It's a really good question, and I think the takeaway was kind of learning how to analyze some of these, on the fly, how to analyze the construction of some of this. One lady was paying for her contractors to come and inspect the property, but she was wasting money and spending money on them coming in, and then she wasn't getting the deals, and it was a waste. And there was a lot of good feedback related to, well, when you go out there up front, use it as a learning experience, right? Spend $100 to get a contractor go out and give you a bid and walk with him or her and ask questions and figure out kind of what they're looking for, what they look at, things like that. So you can not necessarily eyeball it, but you have an idea. You can't buy a property that needs renovation unless you know what the renovation budget is, right? Or something that's realistic. And since COVID hit, it's been harder to do so because supplies are harder to come by. Lots of building materials, plywood, 2x4s, things like that have gone up in price. Timelines have changed, but that comes with experience, right? And you don't have to do everything up front, but you've got to learn that. So I would say you obviously, you don't need to be a contractor, you don't need to be a real estate agent, you don't need to be any of these things, but you do need to understand the process. And I do think that the construction side should be kind of when you're wearing your analysis underwriting hat.
Yeah, and I think a lot of people start to overlook that. They get very aggressive in their numbers. I do it all the time. That's why, luckily, Dan reels me in. Is like, hey, idiot, there's no way we're going to do it in this time frame for this price. Don't even set that expectation for ourselves, for our investors, for the bank, for anyone involved. Be realistic in what you are setting your expectations for. And the underwriting, honestly, out of all of this, anyone can market, anyone can execute, anyone can sell a deal. Right now, this is, to me, the most important step next to execution. This is the number one step, is the underwriting step. This is where you're making your money. This is where you're negotiating. This is where you're coming up with your financial model. This is where your money is made. You screw up this part, it's hard a lot of the times to recover unless you have a hyper appreciating market. Something changes for the better for you long term. And I'm saying that that's for in a positive. Some of the negative stuff you can't control because you open a wall and the whole house is falling down. There's no way you could have found it in an inspection during your underwriting period, right? So now the underwriting hat, to me, is the most important hat because it's your money, it's your friends and family money, it's your investors' money, it's the bank's money. It's you are assuming this risk for this financial burden that you're potentially taking on.
Yeah, it's your hard work and your hard time. So after kind of the underwriting analysis hat, then we're going to move over to the financing hat, right? And you determine wearing these different hats. Like, do you want to be a full-time capital raiser, or do you want to, it depends on what you want, right? Like, you can be out there full-time raising private money. You could be out there for a short period of time calling a hard money lender or calling a bank, or potentially using your own money, however you want to structure it. But just the point is, you keep it in mind, there's no right or wrong reason, right? You want to buy all properties in cash? Great. You want to use a hard money lender? Great. If you want to raise private capital? Great. But like, I've talked to a lot of real estate investors, and they're like, I don't want to say struggling with private money, but like, they spend a lot of time trying to raise private capital. And I'm not stating that private capital, it's a key component to your business and you should go out and raise private capital. But again, that's a different hat you got to wear. And if you're a one-man operation, you got to figure out if it's worth spending the time on finding new deals or spending all your time finding capital.
Yeah, and everyone thinks it's sexy, right? Like, I know, Jay, I've talked to you a lot about it, about raising capital, and there's this notion that if you're raising private capital, all your capital source problems or solved. No, they're not. They actually have gotten just tenfold harder. And with that being said, before we go any further, I love that you took the financing piece out of the underwriting hat, right? Like, I would have put underwriting and finance all in one, but I'm glad that you pulled these two hats out separately. And I'll tell you why, is that when you're looking at underwriting, you should be underwriting that deal without assuming any debt. Does the deal naturally work? Then you move into this financing stage and say, how can I get financing to add fuel to the fire? And just because you're raising capital 100% from private investors, you are still financing this property. Unless you're if you're taking your money out of your bank account and buying this deal in cash, guess what? You're still financing this property, right? It is your money. This is what you need to be diligent on. Have respect for the money that either you put out or someone else is putting out for you to do this deal. Jay, I don't know. I know we've talked about it before, but you want to talk about how when you and Chris had some rental properties, you committed capital into it and you treated it just like a loan as you would any other capital.
Yeah, I'll hop in that. One other thing related to raising capital and being, putting the hat on of, the financing hat, right? Or the raising money hat. You got to figure out what makes sense for you. Some real estate companies that are big enough, they have a full-time CFO or they have a full-time somebody that's in charge of raising capital, right? When we started Hard Money Bankers, when we obviously we needed to raise private capital, but like, it's a little bit different business model, but like, we have a full, my partner full-time spent time raising capital, right? Like, that was the full-time job. Most real estate investors don't have the opportunity to full-time raise private capital, but you got to look at the risk versus reward and the time, right? You might pay 10% to a private lender here or 13% to a hard money lender over here. And at the same time, it might end up costing $5,000 more for a loan. Then you don't even have to do any of the work, right? You can call somebody up. So it's just something to think about. Just with all these things, right? On the front end, you might hire a marketing company and say, you know what? I don't want to do the marketing on this stuff. I'm not good at the marketing stuff. I'm going to hire somebody to do it because it makes more sense to me. Or I'm going to try to get wholesalers to find me deals, or whatever the case is. You get the point. But again, like we talked about, all of these hats are part of it. They're all part. Every one of these hats is something that a real estate investor has to wear. But that doesn't mean that you have to wear them every single day. You got to figure out a way as you grow. And I think you should be very familiar with all of them, even though you might not think some of this stuff's fun or sexy. I really believe it's important to understand all of these. So then you can hire, outsource, create technology, partner on some of these things as you grow. So,
yeah, and when you're wearing the finance hat, sometimes it's just like, I know this deal is perfect for hard money bankers. I'm just going to do it with them. I don't even need to think about it. And then there's other times you're going to be like, how can I leverage every last little piece out of this between utilizing hard money bankers, a private investor, a credit card, my own capital? You need to look at sometimes you have to look at every trick in the bag, and other times you're just going to be able to rock and roll and know exactly what you want to do because the steps before it have guided you to this exact position.
Yeah. So after that, I would say, and there's a few different ways to describe what this next hat is. I mean, you can use the term like execution. I might use the term management, right? Like managing the project, right? So you have to manage contractors, right? You gotta manage the process kind of in general. And this is kind of just a blanket statement if this is a fix and flip or maybe a wholesale, whatever it is, or rental property. But you got to understand how to manage and communicate properly with the demo that you're communicating with. That's important. Like you want to make sure people want to do business with you, and you do it the right way. I mean, we'll talk a little bit more in a second, more advanced hats when you have full-time employees and things like that. But in general, you got to make sure you can execute on these projects and do it the right way. And this isn't a conversation about disc personality types, but you really, as a real estate investor, you got to understand who you are, right? And who you are, what you want to do, and how to kind of adapt to that. Because, if you're an analytical type of person, it's going to be hard for you potentially to be, on the sales side. And if you're salesy, it's going to be hard for you to potentially be on the analytical and the bookkeeping side. Google DISC personality assessment by Tony Robbins, DISC, DISC. We talk about it all the time, but we can go back to the execution side.
Well, I mean, I think this is where a lot of people want to live, right? This is the quote unquote sexy part of real estate. You're out there picking your finishes, or you're laying the apartment building out, or you're getting the property up and running for cash flow, right? Like this is the sexy part of the business. But guess what? Not everyone's cut out to do this. Sure, I don't mind getting up at 5 a.m., go driving across the Beltway 12 times and looking at properties. I got no problem. But long term, without having the person that's the right personality type, it's actually a really bad position for me to be in, because I could be a yes man. Oh yeah, no problem. By the end of the day, I forgot everything. Versus Dan, who's like, okay, I'm going to write everything down. I'm going to create a punch out list. I'm going to get the guys going. Or Ryan, So when you talk about DISC and the execution, well, everyone wants to do this piece of it. This is a piece that you need to be cognizant of. How are you going to manage all the different tasks inside of here? The other thing is, this is when you're getting out in the streets and you're developing relationships, and some other deals are going to come up, and this is where it's important to be having your marketing hat on, even though you're executing, right? The neighbor might want to sell their house, or you're out executing and you run into somebody else that's like, hey, I want to invest in real estate, right? Like this is one of those, I almost call it a chameleon position, that you're operating your business and you're doing it from either boots on the ground, or as Jay said, we'll get into, if you have employees in place, what does this position look like? Different than when you're the single man or woman out there doing this.
And what you said, you describe your tasks, Dan's tasks and Ryan's tasks. Each one of you are different. Each one of you have different personality types, and each one of you have kind of a defined role of, number one, what you enjoy doing, number two, what you're good at doing. And I think that goes a long way. And it's harder as a one-man operation, to do some of this stuff, because you're doing stuff that you're uncomfortable with. You're doing stuff that your natural personality might be unaligned with. But again, someone else might love it. The reason I have a business partner that I have, and Ian has a business partner, Dan, that he has, is because it's not that fully opposite attract, but we have different skill sets. We all have a common goal up here, right? But then like as you go down, one person likes to do these things, one person likes to kind of do these things, and it kind of mixes and match. And I think it's important that no matter what business you're in, but especially real estate investing, you got to understand it. You got to learn it. And I mean, I did stuff in real estate investing I hated doing on a regular basis because like it just wasn't my natural thing, but I did it and I got my hands dirty and I mess with it. I mean, it's interesting. If someone, I get a lot of real estate investors that'd be like, how do you think the best way to go find deals are? And it's like, well, it depends what your personality type is. I was like, if you're willing to go beat the streets on a Saturday morning or just after dark and canvas and door knock, and you can get right in front of people, you're going to get opportunities. But I'm not comfortable doing that. You're probably comfortable doing that, but like a lot of people aren't comfortable doing that, right? So like so again, and I'm not stating you have to do that, but someone might say, hey, well, I'm scared to raise capital. I'm scared to talk to private lenders. I mean, we had, Chris and I used to have a partner that we knew really well, and he was so damn good at finding crazy distressed deals. And he knew a lot of people with capital, and he just did not know how to close a $50,000 capital investor that wanted to give him money. And we did. It was easy. Like, I don't know. It felt like it was natural for us to talk to that capital investor, but like we couldn't find those deals. So you match it together and you marry it together. But I think the important part is understanding the different hats and, fit and kind of going down that route.
Yeah, that makes sense. You know what I think the next step is? There is one final step after execution. And you might think I'm crazy here because some people are saying, well, this is the overall process, but the next step's being the investor, right? Like, and you should be the investor all the way through. But now more than ever, you're operating. You've sold your property. You've done whatever that you were trying to execute. And guess what? Now you have capital to redeploy, utilize in new deals. How are you going to invest that? And you start the life cycle all over again, right? Now, if you have employees in place, maybe you're in this investor mindset at any given time because you have your financing hat squared away and you know where you're getting your capital at any given time, right? But when let's just stick to one-man bands. After you've completed the project, you've returned your capital or you're earning capital on a consistent distribution every month. How are you going to reinvest that money to continue to produce?
Yeah, agreed. And most people forget the word investing is in real estate investing. An investor you're a real estate investor. You're not a deal junkie. You're not a whatever. You're an investor. The most important word, we miss bookkeeping, obviously. Bookkeeping is one hat that so many people, most real estate investors in general, on the surface, it's like, hey, I like real estate. I like construction. I like talking to people. I know a lot of people, blah, 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 blah. Not many are like, hey, I want to be a real estate investor so I can do the books and just do that. But like that's an important. Yeah, what's that?
Have you met my business partner? He loves living in them books.
Yeah, but that wasn't the reason he got into real estate. He wasn't like, I just want to do the books and that's it. Like, that's not typically the case.
Well, I think part of doing the book, and again, I hope everyone sees it, all these hats relate, is that if you're not doing one of these pieces right, it all falls apart. If you're not wearing your bookkeeping hat, you can never wear your investor hat again because you don't know where your money is,
You know how I learned accounting? By accounting my own money. I failed accounting in college 3 times.
Your dad's an accountant, isn't he?
That's right. And I could not grasp accounting. I could not grasp it in a school book. But as soon as it was my own money and it was our business money and we did the books, it just freaking clicked, right? And now don't get me wrong. I mean, we have CPAs and stuff like that I bounced, that helped us with stuff. But like, you took it seriously, right? You weren't falling asleep reading a textbook and learning it. It was the concepts in real life. So the point of all of this is there's a lot of different hats. There's a lot of different roles. A lot of us don't necessarily want to do all of these things on a regular basis, but it's important to. And you'll learn, and if you've done multiple real estate deals and you've grown a team, you're going to learn that as the team grows and as your business grows, your day-to-day activities change drastically, right? Your day-to-day isn't kind of like, cool, let's go find a deal. Oh, we got a deal now. Cool. Now let's go find money. Okay, we got money. Okay, let's go hire a contractor. Okay, let's be on the job site. And then 6 months later, you flip the house, you make money, and then you don't have a deal. Then you got to start the whole process from over. You know, my day and Ian's day are very, very different than, you know, a real estate investor that might only have one project going. And again, I'm not against doing one project at a time. I think that's a great idea if, you know, you want to do one project at a time, or if you have a full-time job and you want to be a part-time real estate investor, I'm all about that. But sometimes you got to be careful what you wish for to have a big operation, a big organization. Like, do you think managing employees, like, do you want to, you know, be a full-time manager of employees? Do you think that's fun? Maybe you do. Maybe you don't, right? But like, that's a role, right? You got to figure out a way to kind of create sophisticated kind of systems and concepts and automation and things like that, problem solving on a regular basis, right? The more deals you do, the more issues you have. That's just what happens. That's just part of it, right? Like,
and as you start to sit up in that top position, your hats start to get blended, right? Like Ryan handles the execution hat on a day-to-day basis. However, we still need to oversee it while we're overseeing the finance aspect of things, while we're overseeing the investor side of things, while we're overseeing the marketing. There's all the different realms that we're overseeing at any given time. And, you know, as you start to become more of a company, I won't even say full-time real estate investor, because you could be a full-time real estate investor and not really be real estate investing, right? You're just trudging through deals and you have this massive team and you're not actually producing income. Believe me, we've been there where we were just turning deals and I don't think we made any money. You know what I mean? We were just getting through deals to get through deals because we had this place.
So many people do that.
Versus now, I mean, think about it. The one comment, it's up on my wall in the office because you said it to me, and the Warren Buffett quote's like insane, is that you need to look at yourself as the investor in every single deal, not as the operator. You're deploying your capital. How are you investing it?
Yeah, that's right. And that's a hard concept, I think, for a lot of people to understand. But if you can kind of understand that this is an investment vehicle, we're all fortunate that our business of real estate investing is an investment vehicle. That's not the case with most people. Most people have a business and they get cash flow that comes into that business, and then they take their savings and they deploy it into they deploy it kind of into another investment vehicle. Well, we're all fortunate enough that real estate investing is an investment vehicle. We can buy assets with it. We can buy real estate with it. We can do whatever we want with it. So the investing is a key word. So let's just sum up a few quick things real quick. There's lots of different hats as a real estate investor: marketing, sales, underwriting, analyzing, execution, bookkeeping, customer service, all that, construction, all that stuff. You know what you do on a regular basis. You know, that was, you know, there's other ways to break these down, but by the way that we break these down. And it's important to do all of this stuff on the front end to learn it, right? You got to learn it, right? There's no better way to learn than just dive in, right? Now, I'm not stating do a deal just to do a deal. You want to make money on it, but you gotta, you know, you gotta treat it like a business. You gotta treat it like a real business on a regular basis. And the goal is to, you know, if you want to be a CEO, right? If that's, you know, if you're into terms and stuff like that, roles, if you want to be a CEO, like, these are all things that a CEO does on a regular basis, right? So, like, think about it. There's a CEO, there's a CFO, there's a CMO, there's a COO, there's a C Joe Schmo. Like, that's you. Yeah, that's you. Oh yeah, CTO. You know, if you heard another video that I did recently like this, when Chris was calling me out about being a CTO, like, I learned how to make websites. I learned how to, you know, write code. I learned how to do all of this crap because somebody had to do it in the business. We started our business with no money out of pocket. We didn't want to put any money in it. We closed our first deal and we used that money as seed capital. So, like, we didn't pay anybody for anything. But again, and I'm not saying that has to be the right way to do it. Typically, as a real estate investor, or any business, you either devote your time or you devote your money. as we grow different businesses that we have, we typically will throw money at stuff because that's, instead of time, but that doesn't have to be like that, right? So, but the goal with all of this is, and we've mentioned this multiple times, is you get to the point that you can hire people, you can outsource jobs and roles to people, automation. There's a lot more automation in this business than there was years ago, right? You can automate stuff, and potentially you can partner with somebody.
Yeah, 100%. And it's not that we want anyone to stop. And I guess you got to look at real estate investing. It's a band, it's an orchestra, it's a team, it's whatever. However you want to look at it, that it's something that needs to work synonymously. You're not just saying, today's my marketing hat, tomorrow's my finance hat, the next day is my, it's not how it is. You're always in these different mindsets, and keeping it all together, keeping it fluid. And I think most people, that when they start doing a lot of deals, they forget to market. And when they're marketing for a ton of deals, they forget that they have opportunity to invest in other deals. And when you're executing all the time, you forget about your books, and you're like, oh, I don't even know where all my money is. Take the time, have respect for each position, understand what it looks like in your business, and utilize it to your advantage. If you're weak in a spot, or you feel like you're consistently weak in a spot, hire for it, outsource it, whatever you need to do, because the faster you can get a hold of these different aspects of your business, the faster that you'll grow, and you'll be able to invest in better deals and get better returns for yourself, and get the lifestyle or whatever you're looking for in your portfolio to create the life that you want to create,
Yeah. And also keep this in mind as you're kind of going along. Typically, there's three main aspects of a real estate deal in general, right? And this is the way I look at things. Typically, finding a good opportunity, like a good deal, is worth about 30, a third. The capital is worth about a third, and then operating and execution is worth about a third, right? That's kind of the way that we kind of look at stuff in general. So, like, if you're, finding the deal is still the most important thing. Putting up capital or having access to capital is still, the most important thing. Operating and executing is still the most important thing, right? So those are the three big things. So, like, don't sweat the little stuff, right? Like, oh, I need to get my books in order. The books are really important, but they're not as important as getting that deal in place and getting that money into place, and then executing on the deal properly. I'm not, everyone's played catch up on their books before, and it's the worst thing in the world. But that being said, like, it's just part of it, right? You're not going to hire an accountant, and you're not going to go spend all this time putting together a sophisticated, accounting system until you have a deal with real money in it. Make money, make profits, and then outsource, and then do it. Lastly, anytime we have conversations like this, the best way to continue these conversations is on the REI Networks platform. A lot of local real estate investors have been utilizing this platform. It doesn't cost anything. You don't even need to create an account to see what's posted on it, right? Eventually, if you want to post or comment or chat and things like that, you'll have to create a free account. It doesn't cost anything. It's completely free. But a lot of real estate investors have been congregating there. It's a really, really good kind of platform that we'd set up recently. It's still kind of in beta mode, but definitely check it out. It's also a really good way to communicate with myself and Ian. We're both on there on a regular basis, asking questions, answering questions. When we have questions of things that we need help with, we throw that up there as well.
Yep, it's right here on this app, Mighty Networks, and then just search REI Networks, or just go to your browser, and then it'll prompt you to
just download. Go to REINetworks.com. That's all you got to do. Go to REINetworks.com and you can download. There's an app that you can download as well, but you can go through it on your browser, check it out. It's good. It's good. I'm glad we set it up. We've had a lot of interaction on it so far.
Yeah, man, definitely exciting. And the other nice thing is, for our Wednesday night meetings, we've been simulcasting it right on there, so you won't miss out. But I got to run. It's almost conference mode, so basically that means I'm going to drink from now till Sunday, or so my wife thinks that I'm going to do that. But
So are you gonna be drinking or no? Or are you just freaking?
This crew here, I don't know. They get a little wild sometimes, so we'll see what the crew's up to. Terry's doing 75 hard. He's not drinking. Guy running the event sober.
I thought 75 hard was over.
Dude, I think he's on 150. I told him I'm on 75 easy, living my best life. So trying to grow this chin. Let's go. So
he's living his best life too. Just because he tells you he's not drinking, who knows what he's doing?
Yeah, I'll beat up on him for you.
All right, man. All right, we'll see you guys next week.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too.